How's it going, everyone? Welcome to Investment for Beginners. My name is Andy and I want to thank you for checking out this channel and this video where we will be using compound interest calculator just to play around and calculate what are the probability of amount of money that we can maybe predict to have. A huge disclaimer, this is very unpredictable and should not be taken too hard, thinking this is like winning a lottery. My portfolio is 100% stocks, which is considered high risk, high reward. So the interest rate may be higher than average and can also fall into negative return too. Keep that in mind. This video is for entertaining purpose of possibility in best case scenario. I'm gonna focus mainly on my portfolio only, just to give you an idea where my portfolio may end up in few years to few decades. As always, if you enjoy anything useful or insightful information from this channel, consider sharing it with your friends and family so we can all hopefully reach financial independence, retire early, or also known as FIRE, or whatever your financial goal may be. Also, consider subscribing if you like to watch new investment or financial related video. If you're new to investing, I will link the playlist for the basic introduction to investment in description below. The playlist covers basic information for online brokerages, investment retirement accounts, stocks, ETF, mutual fund, and bond. I highly recommend checking out the list if you're new. Now, there are quite a few compound interest calculator websites out there, but I use this particular one only. This one has a pie chart, a graph, an yearly or monthly breakdown of how your portfolio performed. I will put the link to the website in the description below if you want to try it out yourself. So under the initial investment, I'm gonna put down 45,000 because that's roughly almost what I have in my Roth IRA at the moment. Below that, in a regular investment, I'm gonna put $6,000 and change this to annually. So because that's how much I put in annually and all of it in the beginning of the year. I do want to mention that if you put it monthly versus annually, there are small amount of differences, and I'll show that a little bit down the road. So I compound this annually, and under the start date. So under the start date, I make sure I start from the next year of January 1st. Now in the term section, I'm gonna put down 30 because hopefully around that time is where I hope I will be completely retired. Now the trickiest one is the interest rate. Interest rate is extremely unstable and unpredictable, and this can really change how much your portfolio will end up with each year. So the way I'm gonna calculate this is I'm gonna average my interest rate since I started investing in 2016. 2016 my capital gain was around 58%, and 2017 it was 18%, 2018 it was 1%, and 2019 so far is around 42%. So you can see the capital gain is kind of all over the place, which make them unpredictable, and the average of all these four comes out to be around 30% per year. But I want to lower this to 15% to accommodate chances that my average gain can be hurt from just bad market. So 15%. But more importantly, I'm doing it as a 15% because I haven't invested long enough to get more accurate average rate. And I also feel 15% will be more acceptable from investors watching this video. So I'm doing my best to get a realistic interest rate for my portfolio and not the stock market. Alright, so once we calculate all of that, after 30 years, damn, almost $6 million. Now that's a lot of money. Now I do want to mention something that I don't think the compound interest rate calculate consider, and that is the inflation rate and the maximum contribution. As you can see here, all of these are just $6,000. As of 2019, the maximum contribution amount is $6,000, but as the year goes by, this is gonna rise. So just keep these two facts in mind looking at this number. Maybe the increase of contribution can negate the inflation rate, maybe. So you can see here, starting from 2020, how much interest it has earned and how much you will end up at the end of the year. Now this number can drastically change when interest rate changes just even few percent. So this time we're gonna change the interest rate a little bit. So instead of 15, we're gonna change that to 10%. And at the end of the year, we have almost 2 million after 30 year. Now that's 4 million different. That's insane from just 5% different in each year. Now if we do 20%, let's see, almost $20 million at the end of 30 year. That just blows my mind. 20 million in 30 year. So before you start to criticize, and I know there are investors out there who will criticize because I am one of them looking at these number, take this number with a huge grain of salt. You know, the stock market is unpredictable and the world finance is unpredictable because anything can happen and change the stock market world as we know it. So please consider being merciful in the comment section before sharing your opinion. Like I said in the beginning of the video, this video is for entertainment purpose with some level of accuracy. I hope. I'm going to show you the difference when you put your investment or your contribution annually versus monthly. So as I showed you before, if you do it $6,000 all in manually, you end up with $5,979,000. But if you change this to monthly, and you're going to need to divide this by 12, very important you change this. So if you do it $500 monthly, because 500 times 12 is going to be 6,000, which is 1 year. So when you do $500 monthly and you calculate that, and you, by the way, you leave everything the way it is, don't change anything. So if you change that yearly to monthly, you end up like $200 short. I'm sorry, $200,000. So just keep that in mind when you're using this calculator, and I guess depending on how you invest, either annually all at once or monthly, there is a small difference. So I'm gonna change this back to 6,000 annually, and as you can see, the interest rate starts low, just like couple $1,000 a year. But as you have more money, that interest rate really jumps insanely high. And as you can see at the end of the 30-year period, in 1 year, your interest rate is almost $800,000, which is more money than most job pays you in a year. And because this is Roth IRA, all these money are tax-free under my portfolio. So just consider that too when you decide to choose which account and retirement to invest in. And feel free to pause and just look at the number. I know I'm scrolling up and down a lot, so feel free to pause and look at the number so that way you could take your time. So this is the power of the compound interest. This is why you want to invest as young as possible. Even having your parent making you custodial account for those who are under legal age. And if you are a parent watching this, I highly recommend making a custodial account for your child. The more time you spend in the market, more money you will make. And more money you have, that money will make you more money in a year than a high paying job can in a year. So if you have time, play around with the calculator and have some fun. But remember, in order to achieve successful growth, you need to do research, you need to do your study, you have to understand what you are investing. Don't always be persuaded by what other people are saying. Let them do themselves and you do you. Educate yourself so you have control over your money, or you can seek financial advisor, whichever you are more comfortable with. Thank you for watching this episode, and if you enjoyed it, I would appreciate it if you could super smash that like button and make sure to subscribe for more future video. And as always, invest wisely.